since there's not a lot going on the shorter time frames, I thought I'd go back and have a look at some of the big picture trades that we've got on at the moment. So this is a pound Aussie, which has been trending downwards really nicely for a long time now. So just going back over to the macro matrix, and for anybody who's hearing about this for the first time, this macro matrix is simply as a result of my global macro analysis and just putting a very simple scoring on each of the currencies from very bearish all the way through to neutral and then up to very bullish. So we're just looking here at the British pound. So this is, I won't go into the analysis. I'll just we'll just go from here to the trading chart and look at the pound Aussie trade. So macro matrix, the pound is -3, and it's the most bearish out of all of the currencies. And if we go down to the Aussie, we see it's a +1. So at the moment we have CAD, New Zealand, and Aussie as a +1. And in the next week or so, I'm probably going to go back and do the analysis again and make some adjustments. You probably want to be doing this every, 2 to 3 weeks only. It's not something that changes that often because this is the big picture. We're looking at, from I'd say from about a week, 3 days to 3 weeks, the kind of trades I'll be taking. But the actual trends themselves can be, 3-month trends. But the actual chunks out of price action that I usually take is from 3 days to 3 weeks. That's the time frame I like to play in. So pound Aussie. Let's go over to the charts and have a little look here. So here we are back here on the about the 8th of June. The pound Aussie, which had been trending down quite aggressively, started to put in a bit of a pullback here. So we had higher low, higher low, higher low, higher low, higher low, and then a lower low here. And so I just drew this counter trend line across here, and you can see it over here on the 4-hour chart. So what I really love these counter trend lines. They're a great way of getting into a trending move. You can see how big the move has been. It's come down all the way from 3rd of April all the way down here. So we had this big move down. We had this pullback. We have this counter trend line, and then I like to go down and drill down and use the bias change to get into a move. So if you've done any of my courses before, you'll know what that is. I'll just quickly go through what the bias change is. So basically, once I've drawn this trend line, I'm now looking for price to resume the downwards trend. So at the moment, I'll be looking at price action. In this moment, I'll be looking at price action and monitoring the news feeds. So, this upward move, it could be like a lull in the negative sentiment that's causing the big downtrend, right? So it just gives us that pullback, or it could be profit taking where all the shorts have decided to take profit and it's drifting back upwards. So what I want to do is monitor either for a price-based turning or a fundamental turning, and ideally have both of them happen at the same time. So here we have price pulling back, and it on the 16th of 16th of June, it broke this counter trend line. And the technique I like to use is for there to be a break and a retest. So it broke the trend line, and then it pulled aggressively back in. And this is where I go down to the lower time frame now. So in this particular case, the price made its way all the way back up to the high of these bars here. So if we just put a horizontal line here, you see I've got all these highs just here. So it came up and it tagged this area, and just on the 4-hour chart, it put in this reversal bar here, this little pin bar. Now, because it's such a high time frame trade, it's perfectly acceptable just to take this trade from here. I don't believe in wave confirmation, because there's a fundamental reason. There's been a counter trend, so it's pulled back. I'm quite happy to take these entries, a sniper entry. So, for example, very often I'll just keep a pending short order just above a previous swing high, like here, you know. So if price just on one bar came all the way up, broke through there, gets everyone long, by the way, on a false breakout, and then it usually slingshots back in again. I'm quite happy to take those without any of these, you know, confirmation bars that people use. But if I am going to wait for price to start coming back down, if it doesn't make an extreme movement like this, I want it to make a nice clean bias change. Now, luckily here you had this really clean pin bar, but a lot of the time there won't be a bar like that there. You have to go down to a lower time frame. So let's go down to the 2-hour chart to start with and have a look at what the price action looks like there. So here we have a 2-bar blended pin bar. So this bar goes up and this one comes down here. So you could have put your short trade here and your stop above here. Now, I love getting really, really tight stop losses on my trades. So what you can do, and this is going to sound kind of crazy, but let's go down to the 3 minutes. So we can get all the way over there. So you see the same price movement here on the 3-minute chart. So price spiked up, and then it started to put in lower highs and lower lows going all the way down here. So what I like to do is I like to take a reversal. So it spiked up, it gave me this movement up to the top here, which is enough for me to start wanting to get short, and then it puts in a high, a low, lower high, lower low, lower high, makes this little consolidation and then breaks out of the consolidation here. So in this case, it was the beginning of a 1, 2, 3, 4, 5 bias change, which sort of morphed into a little range here. So in this range, I'd be looking to take the price short here and have my stop loss down here, right? So that's a much smaller stop loss than if you had gone on the 4-hour bar. So on the 4-hour bar, you would have been looking at an entry much lower down and a stop loss above here. Here, you're looking for a tiny stop loss. And this is where all the money is made in FX. It never ceases to amaze me seeing trading educators doing the chart analysis and then saying things like, my first target is going to be 1-to-1. I'm thinking, you should never have anything 1-to-1. Unless it's part of your strategy to scale out and remove the risk for other reasons, that's a different strategy. But really, if you can't get a decent risk reward on a trade, you shouldn't be taking it. I'm happy to take trades like this all day long because I don't have to get many of them right to end up for the month. So we're in this trade from this bias change here. So we're in this trade from around 182.70, and we're just monitoring it at the moment. So, you know, we can see it's been 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, around about 11 days of downward action at the moment. So I'm just keeping an eye on this. You know, the risk management is very simple with a trade like this. So what I'm usually looking for is for price to break the previous low point. And then you're always going to expect some kind of pullback. And after you get that pullback and you get a continuation here, you see price here broke, pulled back, and then it broke this point here. You got some continuation. This is when I'm ready to bring my stop loss down to this point here, you know, because now he's confirmed this downwards move, and it's respected this area here. You know, support and resistance is a very imprecise science, but this is a nice sort of semi-mechanical way of bringing your stops down. You know, I mean, in this case, you could have had your stop really tight and brought it down, you know, bang, 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 really close to the top of the bar. But it's not always going to be like this. You know, the cherry pick charts, they always show you being able to like keep your stop loss really tight to the price going down, and it just doesn't work like that. So it's better just to keep it quite loose at this point. You know, we have this tiny risk on the trade here. So it really doesn't matter. So we can afford to give it more room to breathe down here and start to bring it down. So what I'd be looking for now, because this is a long-term trade, and you know, on my macro matrix, I'm looking for the pound weakness to continue. And remember, all the time I'm monitoring what's going on with the global macro in the background. So, you know, even though my stop is, give it a lot of room to breathe. If something really big changes, I'm just gonna close out the trade straight away and then reassess. So you don't have to give back all of this profit here. This is just to give it room to breathe and the usual oscillations, and then move on its way. So I'm actually looking to hold this trade now. So I'm going to keep holding it while that negative bias is in place. And now we've broken this point here. So we came down, we broke, and we continued. So I'll be looking for moving my stop down again once I get another continuation down here. So it's broken here. I'll look for it to continue and then break, and then I'll bring the stop loss down to the high. Or if it spiked up a little bit further, the high around here. So just nice and easy, bringing the stop down behind it. Never looking to scale out on big trades like this. I think scaling out is... there is another strategy where you scale out the risk really quickly, because it's sort of a fast money move to do with breaking news. So you just want to get the risk off really quickly and then let it ride. But in this case, this long distance trade, I'll be looking to scale into this trade as things occur. So for example, maybe we get another, you know, big counter trend line coming in here, and we can take another short. Or perhaps, you know, like before this moves down, there's a big spike bar which comes up and comes down, and I can actually get a bias change on that. If it really hammers into resistance here, you know, one of the trades I really like is where price punches into a resistance level on a big spike, and I like to snipe it. This is why I say I don't like to look for you know, so-called confirmation, because by the time you get the confirmation, all of the advantage of the small stop loss is gone. Take the trade. If it works, it works. If it doesn't, it doesn't. And you can always, you know, have another go at the trade, because your stop losses are so small. We're talking, you know, sometimes, you know, 15, 20 pips stop on a trade that goes many, many hundreds of pips. But anyway, so this is our trade at the moment on the pound Aussie dollar. So we'll just see how this goes, and yeah, we'll see how low this one can go. Let's just zoom out. I'll put this back on the 1 hour chart again. Here we go. You know, my favorite time frame is the 1 hour. It's I don't know, just psychologically for me, because there's 24 hours in a day, I just get this feeling of price action from the 1 hour chart that I don't get from any other chart. So here we see here, you know, here's the break. You know, it comes back, punches through, and then continues down. So you even look at, let's have a look at this with the volume profile on here. So I like to use a volume profile just in a really simple way. I don't, you know, I don't want to overcomplicate it. So I like to just look at the way that the balance area is migrating downwards. So you see it comes up here and it kind of meanders around here, and it's range bound in this zone here. You know, don't need to be too precise about it. And then bang, you get this punch down here. So, you know, for example, when it popped down here, it pulled right back up here into all of these. So this is telling you there's a lot of business going on here. So, you know, that's going to cause resistance, which it did here. So you've got something nice and substantial behind you here, and then down it goes. So, and we see that now the balance area is starting to migrate lower, pops up a little bit, bang. See, it's lower than these two here. Lower, and now it's going down a little bit lower. We're looking like we might get a bit of a pullback here. So yeah, that's something I can go into in more detail later when we look at the actual intraday trading setups using the volume profile to scalp your way into a move. But anyway, I'll also do a video about the bias change in depth that really shows how I use this. It's a very versatile technique, where you drill down to a lower time frame and you look for basically like a 1, 2, 3, 4, 5 reversal. And there's also some other chart patterns you can add to it as well. Double top, a mini head and shoulders, and a couple of candle patterns. But just basically, it just allows you to trade when price has really gone against where you want to go, and now it starts to go back in the direction you want to take it. You can get an early entry, and you can get a logical stop loss level on that lower time frame. So yeah, it's a really cool technique. I use it on fib retracements and when I get like big time frame reversals, and also counter trend line breaks. It's a really good for kind of drilling down and getting into those like we have here. Okay, that's about it. Thanks for that, and we'll do another video later today.